Good morning and welcome to the Option Pit AM Volatility Report. I am Mark Sebastian. Hey, so some good stuff for you guys. You get 2 blogs for the price of 1 last night. We have Andrew discussing Apple versus Amazon, whether a rally will hold or not. And then we have me discussing the underperformance of the Apple straddle, both of which are super interesting and exciting, and go you guys for getting 2 free blogs. You can go to optionpit.com/blog to read. So let's talk about the market today. Well, millions of fanboys are crying into their Apple phones, talking to each other about how Apple is down and texting each other through their pretend iWatches that don't exist yet, and asking Siri how the stock could be sold off. But that's okay. The big piece is that the way that straddle performed. So yesterday, the at-the-money strangle was pricing in a pretty decent move. And that move is essentially gone now. It was pricing at about a $5.50 move, and they got a $2.80, and the strangle basically collapsed from 680 to 280. And I think this is one of those people say, why is the stock down? And the answer is, when you get a combination of media hype and fanboydom, it's very difficult not to have a kid at Christmas effect, where no matter how great it is, disappointing. Where you're like, I love my new bike, but, I could have used a second new bike or something like that. It just goes to show how kind of greedy people can be. But, that's the way Apple is. Then, as I look kind of at the rest of the market, believe it or not, there is a rest of market. You can see the S&P is up a touch. That NASDAQ number is no good. The Dow's up about 30. VIX is up a touch, which is strange considering the amount of movement that we've had, which is none. So we've got a slightly rallying VIX, and we've got fanboy dumb, not Don, fanboydom. So you've got VIX up a touch. I don't think that'll last. And so I do think that we'll see that. So this is where I think you'll see that vol come in a little bit. S&P has been unable to break out, but has been hitting kind of these higher mark levels. The RUT, which was pretty weak yesterday, looks to be a tiny bit stronger today. And oil stocks continue. Now that oil appears to be flattening them up. It's not taking off, but it stopped moving. It stopped tanking. We're in a spot where vol might just continue to drop, and oil could, take a slow climb. I still love short vol plays, and I think long oil and oil services is going to be okay. I think that's a play. There's a lot of other stocks that are reporting. Twitter reports today. We still have a lot of other names that are reporting. ExxonMobil, I think, is next week. No, it's end of this week. CVX. So lots of other names reporting this week. It's just going to be a little bit. And that's really the play. So I would that's the way I would kind of view the market. I think we will. I don't think we're going to have a really, there things are ugly in China. And we were down a little bit in Europe, but it doesn't seem to be doing much. So I don't know. The VIX is rallying, which leans toward maybe a down day. But I don't think we're going to see you're going to be disappointed if you're looking for 20 or 30 points down. All right, folks. If you got questions about our mentoring or services, you can email me, mark@optionpit.com, or call me 888-TRADE-01. I will see you shortly, and I will talk to you soon. I'll be back in a few minutes.